Hello and welcome to our daily market review and analysis. Thank you for joining me. Unfortunately, I failed to do the recording when I did the live session, so I'm going over it again. So it's Tuesday late night and we are looking at the euro pairs today along with other charts we normally consider. So first one to start off with, and also just a point to make is that this week is a relatively short week. I think there's an Easter Friday this week, and then we have bank holiday on Monday for most of the European and Western countries. So it will be a short week, and therefore we've only got Wednesday and Thursday, and Thursday might also be a relatively short day as people wind down for the holiday. And there is a talk that perhaps the Cyprus will open on Thursday, but I doubt it very much. If they're planning to open on Thursday, I don't really think there will be a point. I think they will hang on and open following week after the bank holiday Monday. So anyway, so I think every seeming announcement or press release will probably cause the market to jump up and down in a volatile way, but relatively narrow range. Don't expect it to do really a great deal between now and then. However, we will look at those pairs and see just exactly what the likely effect will be. So coming on, Dow Jones Industrial 30, from yesterday where we left off, we had the wave 1 down and its ABC retracement today. So it looked like market was recovering, but then we still have this wave C. So potentially, if this was a wave A, then we have wave B here, and we basically looking for wave C to the downside to complete the correction. Whether it comes all the way to the rising trend line support, which is the baseline here, or whether it simply comes into somewhere around this level here, is really not that important. 14,298 or 14,200 or 14,300 doesn't really matter. I think that we are basically looking for a wave C decline, and in conjunction with the fact that the dollar index recently has been acting in coherence with the market. So if the market's going up, the dollar index is going up, but I seem to think that we will be looking for this area to actually get that particular synchronization to snap back to the normal relationship, which is where they have inverse relationship. Whereas the equity goes up, the dollar comes down. I think this area will probably force that relationship back as a normal relationship. So I think the equity market is pulling back, and there is a chance that the dollar will still continue to rise. And then once the equity market bottoms and makes a new leg up, the dollar will be on its new downtrend trajectory, in my view. So we are looking for Dow Jones Industrial to continue declining, possibly Wednesday and Thursday, 2 days. I think it will probably continue down. And if we look at the oil, then oil, as you know now, that we've got two possible scenarios we're looking at, from which I covered yesterday, and that is either, if we go on the weekly chart, either for this one to be an A, B, C, and then the blue line to come in for a D and E, in which case we are in a new uptrend with a 5 wave. I, wave 1, wave 2, wave 3, wave 4, and currently in a 5th wave to the upside, and which is likely to break this declining red line. If however it fails that and it drops below, then the other one is more likely, which is wave A, B, C, D here, and then coming down for an E before the oil goes up. But recently, last couple of days, oil has been going up quite strongly. Whether this is genuinely as a result of market gauging that perhaps there is a improving economic conditions in US and hence the oil price is rising, or whether this is purely because of some political tension in the Far East, maybe North Korea reportedly is posturing for aggression toward the US base there. So temporarily the speculative pressure might have pushed the oil up for that reason. Nevertheless, we won't know a great deal until it either breaks up and confirms in a new 5-wave up, or it fails and comes down back here before we get our orientation regarding oil correctly. So it's not giving us a great deal of indication other than it is currently still in an uptrend here. So far I've been saying is retracing this down move, but also now looking at this, it looks like the momentum is building to the upside, so could well be impulsive move to the upside. So in summary then, the equity market is declining. It's got a bit more downside. Oil market is now probably in an uptrend, and therefore the dollar index couldn't really reduce from oil which way the dollar index is going, and from the equity market we're expecting equity to come down, but the dollar index is still pushing up. So let's just quickly look at the dollar index. So this is the dollar index, and as you know now that since the session from Monday, I've said that this one from here, from the low back in beginning of the year, is that we have this wave 1, wave 2, and then all of this here up to there is wave 3, and then this possible ABC kind of a flat or a triangular as wave 4, and we are currently in wave 5. Now in a shorter term, if you look at it, wave 5, this first leg up appears to be 5-wave motion of some sort, maybe from here 1, 2, and then you go 1, 2, 3, 4 and 5, so that finishes wave 3. So 1, 2, 3, 4 and 5, so maybe 5-wave is up, in which case the dollar has topped, or more likely that 5-wave is a minor 5-wave completing, giving us wave 1. And like yesterday, as I indicated, that for the next couple of days, Wednesday and Thursday, we'll see dollar probably still going up, and therefore we might get something like wave 1, a retracement wave 2, wave 3, wave 4 and wave 5, and dollar will probably top by the time the market closes on Thursday, or will do very early on next week when they open. But I think we are almost toward the end of finalizing this top for dollar index, and that will have implication on other US dollar pairs, which are still continuing to weaken for the time being, but the trend is likely to change for them fairly soon. So let's go over and look at the euro pairs. That is what we are going to be looking at today. So from yesterday we were looking at this euro pound, and the euro pound from having topped has done wave A, wave B, and currently in a process for wave C, and wave C should be 5 waves. So I think if we look at it from here, it looks like this up to here is wave 1, wave 2, and then this gap is a part of a wave 3, even though it's a shorter wave than wave 1. But if you look at the RSI, you can see on the RSI we have wave 3 showing highest momentum up here. Okay, so I think that wave 3 is probably still correct as a part of a wave 5-wave motion. Wave 3 should not be the shortest. So in this particular case, it might be that we have wave 1, wave 2, and then this one here starts off of wave 3, wave 1, wave 2, then you got wave 1, wave 2, wave 3, wave 4 and wave 5. Okay, so then we have ABC retracement for wave 4, and we've started now a 5th wave, which is probably an ending diagonal. So we got wave 1, wave 2, wave 3, currently retracing in wave 4, and then one more drive down to complete 5th wave, where euro pound will bottom, and then we will begin to see a new uptrend developing. So we don't have a long to go, fairly close, but when the euro pound bottoms out, chances are also that the euro will probably bottom out against dollar too, or maybe against most of the other currency pairs. So let's look at it. Euro CAD. Now euro CAD, as you see over a longer period, is come down quite noticeably, and has put a bottom in and is gone up. So we are expecting that to be in a new uptrend. So what I think now is there could be two things developing. The first one up here is a wave 1, this is wave 2, and we could be in a second cycle which is in a wave 3. We got wave 1 and wave 2. So in other words, we got 1 2 1 2, and maybe we should then start the wave 3 of 3. But in doing that, we are currently retracing back down, and it is only a retracement because if you look at the price action so far, it is so overlapping and so jagged that it looks very corrective rather than impulsive, like you see this leg going up. In contrast, this one is most likely to be a retracing wave. But when we come to this level, we have 130 area is, I think, where we are likely to bottom out. For two reasons. One is we have got 78% retracement of this leg up, and secondly, we have from the high, we see wave A projecting from wave B. We have Fibonacci confluence coming into this area, which is effectively like 161% extension of the wave A. That comes into that area too. Let me just take this other one off that we don't need now to simplify. Okay, so we're looking for that 130 area where we would probably see a bottom, and in this wave C, we may have possibly a small retracement and then final leg down to complete. So we'll finish up with the wave 1, wave 2, and then as a part of a 3 we've got wave 1 in bracket, wave 2 in bracket, and when we should get wave 3 to the upside in a very strong way. If we look at what that means, we'll see on one of the chart when we come to Euro Yen. In the meantime, you can see the price is coming down and RSI is almost beginning to flatten out at the bottom. So we've got potential divergence developing. Divergence do fail on occasions. However, here we've got few things now lining up in a sense of horizontal level where previously strong resistance now broken above, coming back to retest it, and horizontally we see also on the left hand side is an area where we came down and we bounced on that area. We penetrated it a little bit to the downside, but then we quickly recovered and we oscillated on either side. Then before that sell-off, we took up the sell-off from that level. So we could expect development of a bottom in that area, probably, as I say, during this week, so Wednesday and Thursday, and then possibly from next week, I think the Euro card is likely to go to the opposite. It's likely to start rising and commencing its new leg up. And Euro Swissy we will ignore. There's not much really in there worth trading unless you're fortunate enough to catch some of these swing that have recently come into existence. So the New Zealand, Euro New Zealand is the one that we're looking at. Euro New Zealand is a really good one in a sense that it's come down, and we had this steep decline as a wave A, wave B, and we have now formed the bottom of wave C here back in 2012. And if you look at it, it's in a contracting triangle, and in Elliott wave that's an ending pattern. It's an ending move, so it comes after a substantial decline, so like this one. So we are ending move in a sense of falling wedge of wave A, B, C, D, E, and so that's where it finished. So assuming that, then we have bottomed in this area, and then subsequently we were looking at this wave, and previously I labeled this as 1 and this one as 2 and expecting a wave 3 to develop, but apparently that doesn't seem to have been the case. But when the prices were here up to here, it was difficult to know that wave 3 is going to develop, which is what we would normally expect. We expect that when it's here, we expect wave 3 is going to develop because we've had confirmation of 1, 2, then possibly A, B and C done, so we would expect wave 3 to start. And we were coming to these downtrending trend channels which were previous resistance in those areas, so we were expecting that once we broke above, we were definitely in a wave 3, but unfortunately that's not happened. So now we are looking at this and we have to reassess it. So I think what is happening possibly is like we have a leading diagonal. Now the leading diagonal usually starts off like so from the base. So we get 1, 2, 3, 4 and 5 as a leading diagonal. But there are times when we get a megaphone pattern, and I think that's probably what's happened here. Is first of all we got 1, 2, 3, 4 and 5 to give us wave 1. Then I think we have a wave A in bracket. Then we have A, B and C, so that gave us a wave B in bracket, and then this one down is a wave C. So all in all is we've got 1 in bracket, 2 in bracket, then we've got 3 in bracket, ABC retracement wave 4 in bracket, and then this wave 5 in bracket, which looks like an ABC but it's really 5 wave, because if you look at it in a 4 hour, then you can see that it is a 5 wave in the sense that it's wave 1, wave 2, wave 3, wave 4 and wave 5, so like an ending diagonal. So with that understanding now, I think what we have is this megaphone pattern, and therefore that 5 wave up gave us a one larger wave 1. Then we got A, B and C back, and if we project the wave A from wave B, we get 1-to-1 ratio coming in around 151.35, and 151.35 is approximately an area where previously we had some support, but it's also just below 78% retracement. So we may bottom at 78% retracement, which is around 152.30, or we will get this area which is 151.30. So somewhere in there we are expecting a possible bottom, and over the next couple of days I expect a bounce and then another leg down. And then what to look for is this. See, on the RSI at the moment on daily we got no real divergence, and we might not get a divergence, although it'd be nice to get one. But if you look at a 4 hour, then we are beginning to flatten out, and the RSI although price coming down, RSI is basically bumping along this 30 level. So my feeling is that on this retracement and another leg down, RSI will probably make an attempt to run up, and then with the price coming down, RSI will come down and fail to confirm, and therefore we'll get a divergence. And in a shorter term you can also put a small trend line across there like that on 4 hour, and the breach of that by the RSI will indicate that the bottom is most likely in and the momentum is to the upside. And in the same way, while it's difficult to put a trend channel or trend price on, but maybe if you put a trend line here on 4 hour chart, the break above that would confirm that the price has also now started moving to the upside and the downtrend is over. So Euro New Zealand also is very close to bottoming out, and potentially if you look at it in a longer term, once it bottoms out here, we are looking for that one to at least come back and retest this, and more likely to over there. So in that way it's like nearly 1,500-1,600 points to the upside. So when we start from here, depending on where the low is formed, we may finish up with maybe like, you know, a couple of 100 pip stop in the initial stage as a catastrophic stop. Of course, if the prices keep coming down, then we don't want to enter. But once the price forms the bottom and gives us some kind of a signal in the sense of like a very bullish engulfing bar, or a very large wick at the top, and like a hammer or something along that line, then most likely we would find that was the bottom, and we'll probably then try and enter with a relatively smaller stop compared with the 200 plus pip we're looking at. But it's reasonable for that kind of stop loss initially, and keeping your position size relatively small, so that, you know, the upside is huge and we'll be able to add position on as we go along. Other than that, you know, this looks a very bearish kind of a pattern really. I mean, everybody would say, for example, if broken below, now that will become resistance, and it's almost like a dumpling pattern. So in that respect, I must admit it is not a very encouraging pattern. But if my understanding of this 5 wave up is correct, and when you're looking at charts like these and plotting it live, and sometimes when the pattern is not clear, the wave count are difficult and not easy. So with that assumption, if we understand that this wave up is, I think, without really you know, like cheating on rules or really twisting things. With this amount of price action here now, I think it is reasonable without breaching any rules or the guidelines to suggest that this is an expanding flat. So it's a leading diagonal with 5 waves, and we're retracing A, B, C. And also the other thing is, see this here, this looks like not very good, but it looks like a diamond shape. So this kind of a diamond shape happens either at a midway. In other words, you'd expect the leg up there to repeat at the bottom, which we've got, or it happens at the bottom. Now in this case, when we first identified this, it was supposed to be at the bottom because we were coming into this other area where there was a previous support. So but it didn't develop into a bottom, so we've got a continuation, so that becomes a midway. So I think with all that sort of a thing, this time around I think the bottom is likely to be in, and the euro is showing potentially a bottom against euro Canada and also against euro pound. So maybe with the other currencies is likely to form a bottom at approximately similar sort of time within a day or so of each other, or probably all on the same day. So that's euro New Zealand. Then similarly on the euro Aussie, we have not exactly a sort of what you call an ending diagonal, but on this one, you know, we have, you know, just parallel channel coming down, and with an important bottom. What we do have is we have a divergence forming from here all the way up to there on a weekly chart, so that's encouraging. Secondly is that we have gone up very strongly from the bottom, and if you compare that with this current price coming down, is much like the New Zealand dollar with euro New Zealand. It's a similar kind of jagged, very slow, laborious coming down. So potentially that would be a retracement. So retracement of what? Well, possibly retracement of this entire leg up. And previously I labeled this one as 1, this one as 2, and then again 1 and 2, but I think more than likely this is 1. Then we have this here as a capital, or this one as a wave A in bracket, wave B in bracket, and we're coming down now in wave C in bracket. So we'll finish up with an expanded flat with a wave 2. So wave 1, wave 2. So we should be starting off in a wave 3. And also the 200 period moving average that I've applied on here, you can see on this occasion when the price crossed above it, it was flat. Then again over here when the price closed above it, it was coming down a little bit. Now we pivoted on there, gone back up, and we come down, we've shot underneath, but see the 200 period moving average is now distinctly pointing to the upside. So my feeling is that we have overshoot to the downside, just like we overshot over here. And then on the RSI you can see that we have a downtrend clearly broken, or will be soon if the price trends up. So that would be the other confirmation that the price have now ended. So we basically want price to veer off to the upside from here, for example. Okay, so again on that one we could expect a small retracement, another one leg down, but more than likely a bottom to form by the time the price gets to this sort of low here. Currently it's approaching 61.8% retracement of the entire move up, so we could find a bottom there, or maybe fractionally lower around 121 area, which is approximately 78% or just above 78% retracement. But more than likely we'll find a retracement, sorry, bottom forming in the area 122. Okay, so that's a euro Aussie. Now out of these, obviously you'll only need to trade one euro pair, either euro CAD, euro Aussie, or euro New Zealand, or euro pound. But which of them that you will trade will depend on basically to some extent your preference. But if you were looking at a possible pair, then either euro New Zealand or euro Aussie could be a good pair. Euro Canada could be good as well, but I think the Canadian dollar is likely to be stronger than the New Zealand and Aussie. So from that perspective, it would be better for either New Zealand dollar or Aussie dollar. And with the pound, euro pound, then pound is also likely to be stronger. So you might not get the same mileage out of the strength of the euro. So possibly euro New Zealand or euro Aus. And then the euro yen is currently, after having moved up, and really the wave 3 I was talking about, this is the kind of wave 3. It gets very steep and it gets very what you call strong, with an impulsive move to the upside with a relatively short lived pullback. So that's a kind of move we are expecting on euro Aussie or euro New Zealand. So with euro yen, we've got wave 1, wave 2, then we've got this wave 3 here, which is the Roman numeral 1, Roman numeral 2 in bracket, Roman numeral 3 in bracket, and currently congesting in Roman numeral 4 in bracket, where we got wave A, wave B, and wave C. And we are likely to go up for a wave 5 to the upside. And I wouldn't necessarily trade euro yen because basically when it goes up there, you don't know how far it will go. Either retest the high or make a new minor high. But you can see this rising pitchfork. We've run into it once, we've come down, we could run into it second time, and we would probably fail. So in that case, although there are good, a good 700-800 pips available, but I think overall either euro Aussie or euro New Zealand will probably be a better longer term swing trade in my sort of assessment. So that would be the one. But if we are looking at, say, if you have a screen like this with the euro CAD, euro yen, New Zealand Aussie, and euro pound, all of them on, then decide which particular pair out of the euro New Zealand or euro Aussie, and when you identify when to enter, then at the same time on the same time frame. So if you're using hourly chart, then look at others on an hourly chart also and see if they're almost beginning to confirm a potential bottom forming. And that would give you a greater confidence that we are actually at the bottom, because what you don't want is to expect a bottom and then find bottom only in one pair, because that might be as a result of a weakness of the counter currency of that particular pair. So if you're looking at euro Aussie, then it may be a particular weakness on the part of Aussie dollar, which means that the euro Aussie is bottoming. And if there's no such evidence on the others, then it's like it's an odd one out. But if you also see others beginning to confirm, then that means the common factor now is not the other counter currency pair, but rather it is the euro that is actually demonstrating relative strength and is being noticed across the board against other currency pairs. Like recently, we've noticed its weakness, relatively speaking, against other currency pairs. Okay, so that's the euro pairs done. Very quickly, I'll just take you into the pound pair. I won't go into great details, but nevertheless, if you just basically look at pound CAD, then pound CAD also we were expecting a retracement and down. Well, the retracement was very shallow, but we're coming down into an area where we identified, and in fact we've even passed beyond that. So personally, I think we've got a small retracement and another leg down, so we could see possibly 153.80 to 154 area, possibly an area where we could find a bottom forming, and we could possibly consider going long. Then similarly, euro pound New Zealand also looking like it's coming back to this rising trend line support, and appears to be also at a retracement level. And where in terms of the wave count, what I think is that we have the bottom here with a wave 1, and then this one is a wave A, ABC back up as a wave B, and then we've got A, B, and C coming down as wave 2. So we've got wave 1, wave 2. So I expect the next leg up to be quite strong, and therefore potentially very profitable. So we'll continue to monitor that. And same again for the pound Aussie. Pound Aussie, we had a leading diagonal of the bottom here that I explained yesterday. Then we got wave A, wave B, and wave C, and it's possible that this wave C is still looking like some kind of a falling wedge. Maybe if it's not a falling wedge, then effectively what we got is we got wave A down, wave B up, and then we got 1, 2, 3, 4 and 5. A leg down will probably complete that. So I still think that we have potentially a falling wedge, but not as pronounced, but nevertheless a falling wedge. And so we should be looking for a bottom by the time it gets. We've already retraced more than 78%. So the next one is what you call the 88% coming into that area. Yeah, I think 88% coming into this area here. Also it is a 1-to-1 ratio, so we should be able to find a bottom just above that 88% retracement, and then our long entry could be confirmed for that level. Okay, so we'll go over the US dollar pairs, couple of them that we look at, but both pound and euro appears to be offering good potential for possible long trade, for a swing trade starting off from back end of this week. But I wouldn't enter into any trades, but I'll wait until Tuesday when you can confirm and enter as appropriate. So we have the British pound against the US dollar. From yesterday, as you know, that I have indicated this first move up is wave 1, wave 2, wave 3, wave 4 and wave 5, and therefore we are coming down in ABC form. So we've got wave A down. I don't know what to do about this spike, but otherwise is wave A, wave B, and we are working down in a wave C. So we should see that wave C also coming down, and quite possibly forming a wave 4, sorry, ABC down. So ideally it is a 5 wave up, so we gives a wave 1 or wave A, ABC down as a wave 2 or a wave B, and then we should be going up in wave 3 or a wave C. But you know, we will probably do AB equals CD as a minimum, and we'll be looking for projection to about 155 area most likely. So that also is an interesting fact, because if the pound is bottoming against Canada, New Zealand and Aussie, then we should see also forming a bottom against the pound dollar. Okay, so that's a pound. We look at the Canadian dollar, and on the Canadian dollar, US dollar, is we've had this triple zigzag. Either you could say it's like a leading diagonal to give us a wave A, or a triple zigzag, but either way we've got wave A, wave B down, and then in a wave C we need 5 waves. So we go wave 1, wave 2, wave 3, ABC retracement wave 4, and we are now looking to go up. So last couple of days Canadian dollar has been quite strong, but I think that is now probably over, and we should really be looking for the new leg to the upside. That means the dollar index is likely to continue with it also, and we'll finish with the dollar index potentially topping out when the dollar Canada tops out in that particular manner. Okay, so then the final one to look at is a euro Aussie, euro dollar. Now in the euro dollar, as you know, we've been coming down from the beginning of February, and we appear to be now currently in an area where I think we're going to form potentially a falling wedge. Let me just get a correct chart. Okay, so we've got this one declining in a trend channel. First one is this red trend channel, then we've gone slightly above, and so we've got a pink as a potential resistance line, and then we are looking for a final wave to the downside here to end the pattern. Okay, so in that process what we want now is possibly a 5-wave pattern. So we've got wave 1 down, or not quite ready. We will have wave 1 down. Let me just go back to the other chart where possibly this chart here. Okay, so you can understand this bit better. That's the reason why. is because we've got a pink trend line coming down for the euro dollar, and then this one is for the dollar index. So dollar index, having completed wave 4, is on its way to produce a wave 5, and I think what this wave 5 is going to be, although the first one we've noted is already done wave 1, so that potentially could be wave 5, and therefore the dollar has topped. But I think it is not, and for the rest of the week the dollar is going to continue higher, on the basis that we've got equity market pointing lower. So here now what I think is we've got wave 1 up, we get wave 2 retracement like that, then we'll get another leg up, wave 3, wave 4, and wave 5. I think that's a kind of pattern I'm expecting, like a rising wedge. Now if it turns out to be rising wedge, then that would be really an excellent confirmation for us, because one, it marks an end of the move to the upside, and because it's gone up in a 5 wave, we could expect a major reversal, major trend. As an absolute minimum, you expect it to retrace partially, but I think we are going to be doing a lot more than that. So in the same corresponding way, the euro dollar don't have the same clear 5 wave labels. So here is where we are. This is wave 4. So over here is our wave X. This one here should have been wave X. Well, okay, if it's not, then we've got here as 1, 2, 3, 4, and 5 is the wave A, ABC back as the wave B, and we are coming down in a wave C, and that wave C potentially is going to give us this ending diagonal. So we'll finish with the A, B, and C. So with the wave C, we got A, B, C, D, E, or 1, 2, 3, 4, 5, etc. So we're looking for euro to bottom out. So this is interesting now that we've got both the pound to bottom out is retracement, euro to bottom out this one, and then longer term, if the euro bottoms out there, then as I've explained in the other video, what we got most likely is let me just get the right chart. So what we will get is if it euro bottoms out probably about 128 or probably 126.70, and when I say 126.70, we're basically looking at, see this one here, which was September low, comes into that kind of area, or as an absolute sort of a thing, maybe like 127, but I'm not expecting that much because of the potential contracting triangle in that play. So we will finish up with this pattern here, which by now you should know that if we are looking at wave W, X, Y, X, Z, then we have W, X, Y, X, and a new leg up there to do a Z. Or from the July low, we got A, B, C, X, A, B, C, X, and then another A, B, C pattern to the upside. So I am expecting fairly bullish a sort of a move for euro once it bottoms out over here, regardless of how difficult it may seem to justify that. Okay, so that is all from me. I don't know if there are any other questions. If there are, please feel free to send it to me by email or by Skype, and I will be more than happy to address them in the next session, or any suggestions in the same manner. And then tomorrow we'll be looking at Canadian pairs. So I look forward to you joining me then. And in the meantime, I wish you all wonderful, successful trading, but keep your position small, because I think at every press releases, every news release regarding Cyprus, there's going to be a lot of whippy up and down move, and there are a few economic announcements coming up tomorrow and on Thursday. So from that perspective, it's best not to get too involved in a market that is not exactly trending. And as you know, we're expecting potentially like a dollar even in a potential contracting triangle. So that's not going to leave us with a great deal. So I would suggest that because of that is to keep your position relatively small, but clean up the charts so that they're ready, and then decide which particular currency pair. So almost like getting a battle plan sorted and ready, and then next week when the market opens, we should be able to continue. Now, looking at just to go back and digress a little bit, looking at Europe possibly bottoming out in that area, what I think is likely to happen is that the Cyprus market is banks are supposed to be opening on a Thursday, but I think because of the holiday coming up on a Friday, they're not going to open on Thursday just for that, a headache which they currently are trying to still grapple with. I think market will probably remain closed in Cyprus whole of this week, and then open next week after the big break after the Easter bank holiday, Monday, and then Tuesday is when they will open, and that will give them extra time and also to stop people doing the run on the bank right in the middle of the holiday period. So with those things in mind, I think we will find that if the euro either closes at the low, and then the news might be very positive, in which case euro will gap up and will just continue up, or we will still close at the low, and then what market will do is that euro will have such a bad news, it will do a capitulation gap down, and then it will reverse, and that will be the bottom until reverse. So either way, probably early next week is when I'm thinking some of this trade will line up, and where we can start maybe fine-tuning our charts and probably start entering with small positions on selected pairs. Okay, so thank you once again. I will post the video out as soon as it's loaded, and then hopefully you find the material we covered useful, and look forward to you joining me tomorrow when we go through the Canadian pairs. Thank you.